Welcome to my channel. Today we are going to do long-term analysis of Aditya Birla Capital. Many of you would have bought this particular company at all-time high of 250 rupees or maybe 200 rupees, and today it is trading at 145 rupees, which is 43% down from all-time high. So you would have been very confused, like what to do with this particular company, whether to buy more and average it, or to sell it, or to hold this particular company for a longer period of time. And if you want to hold, then how long you need to hold this particular company in order to cover your capital again and start gaining profit. So in this video we are going to see that only with the long-term analysis of Aditya Birla Capital. So let's start with the analysis. So today we are going to do long-term analysis of Aditya Birla Capital. And before we start, I would like to add 3 points here. Point number 1, this is a long-term analysis. This is not a short-term analysis. So do not take your buy or sell decision based on this analysis. Point number 2 is, this video I am making in English language. A same video I have made in Hindi language as well, link for which I have given below in the description. Third point is, please subscribe to our channel so that you do not miss a video like this in the future. Okay, so let's start with the analysis. Point number 1, introduction. ABCL is a non-deposit taking core investment company. So what that means, this particular company cannot take deposits from the public, but it can give money to the public, like it can give loans to the public. And this company is also into insurance business and broking business, stock wealth management business. So this is a purely investment company, and it is a holding company holding 8 subsidiaries under it. They are into different businesses like stock broking, insurance, loan, wealth management, and housing finance, NBFCs. So they are into different business. And this company has also applied for reconstruction and securitization business license. Okay, and now we are going to see some facts about this company. It is a top 5 private diversified NBFC in India based on asset under management. Okay, and it is a leading private life insurance company in India, and it is among the top 5 general insurance broker in India. And asset under management and insurance has grown from 10,000 crores to 24,000 crores in just 5 years of time. So in very less time, the asset under management has gone up more than 100%, which is a very good development happening in the company. And the fourth point here is presence. The company has presence in more than 400 cities in India. So basically it covers most of the cities in India. When you talk about 400 cities, it means almost all cities are covered. And it has 1300 points of presence, and 1,42,000 brokers, agents are working under it. And it is the 4th largest asset management company in India by average asset under management. And the lending book of the company has gone up from 800 crores to 3,880 crores in just 5 years. So again, it is a very good growth happening in the company, right? More than 3x. I think it is around 4x or 5x. It is close to 5x in just 5 years of time. So very good growth happening here in the company. Now we are going to talk about the subsidiaries of Aditya Birla Capital. Number 1 is Aditya Birla Finance Limited. So what they do, it is a well diversified financial service company, and they are into lending, financing, and wealth management. And it caters to different variety of people of the society. Like they caters to retail individual clients. They provide loans to HNI, ultra HNI, micro enterprises, SME, mid corporate, large corporate. They serve everyone in the industry. So again, lots of loan is going out from this particular area. And they are also into housing finance business as well. This business was started in the October 2014, and right now they are having 40 branches and over 1,700 channel partners. And next we are going to talk about Birla Sun Life Asset Management Company. it has a fourth largest asset under management for the quarter ended 31st March 2017 in the mutual fund industries, and the business is growing at a rate of 35% year over year, and it has touched the highest mark of 18.3 trillion rupees in India. So again, very good development happening in this particular business as well. And now next is Aditya Birla Insurance Broker Limited. So it is a business of insurance broking and risk advisory service in non-life insurance business, and they are also into reinsurance business, and it offers reinsurance business solution to other insurance companies basically. Next, we're going to talk about Aditya Birla Capital Advisory. Okay, and this particular business is into venture capital business. They provide loans to startups and new business ideas. They invest in new business idea basically, and this particular business is into venture capital, and currently manages like AUM of 1179 crores, which is again a very big number. Next is Aditya Birla Money Limited. This particular company is into the business of securities trading, broking, and like wealth management, and it offers like portfolio management services as well. And it has 40 branches, 700 franchisee, and the profit of the company has doubled in the last year from 4 crore to 8 crores, and the business is, and this is due to the like increase in margin book by 32%. Next, we are going to talk about Aditya Birla My Universe Limited. So My Universe Limited is basically an app which provides lots of services. It is more like a Paytm type of thing, and which provide like bank account, credit card, loan, mutual funds, and demat account. Through app you can do everything, insurance and all sort of like bill payment and all you can do with this particular app. And it also like it is like a personal finance manager, like who tracks your expenses, you can set your budget, and you can track where all your spending every month, so that you can have control on your finance and you do not misuse your funds and you don't overspend your fund basically. And it has 45 registered financial institutions with this particular company. Next, we are going to talk about Aditya Birla Health Insurance business, and it is a new business. And recently, in the current year only, they have started this business, and they have, in order to expand this business, they have tied up with various agencies. Bank insurance means basically banks are selling their products, and they have selling their products through brokers and from digital online, through the online mode they are selling, and through online tele-assisted channel, or from all those channels they are selling this particular product like health insurance, right? So next we are going to cover financials of the company. So there's nothing much in this particular because the companies recently got separated from the business, and now it is coming under, it is a part of Grasim Industries now, and they're like all the financial business they merged into one. So we don't have data of last 5 years, we have data of only last 2 years. Okay, so if you see the share capital of the company, it has reduced basically from 2500 to 1232, and that is because of the discontinued separation and all. So there's nothing much in this particular balance to talk about. But if you see the long-term borrowings of the company has gone up, and this long-term borrowings of this type of companies will be always keep on going up, because the thing is they borrow fund from different places and they lend fund to the individuals and companies. That's why the long-term borrowings of the company will be very high. So we don't have to worry about the very high amount of long-term borrowings. We don't have to worry about that at all. And the short-term borrowings of the company is also high. And if you talk about, if you see, the company has invested in life insurance business and health insurance business, and the company is also have very good amount of asset to cover the liability which may arise in the future related to life insurance business. And the long-term loans and advances which the company has given up, it has gone up by 10,000. If you see it in 2016 it was 18,000 crores, and now it is 28,000 crores. And the total, again, non-current asset has gone up from same 19,000 crores to 61,000 crores, and the current asset of the company is doesn't matter much actually. So the thing is, we don't have to worry about this long term borrowing, short term borrowings, because it is a business isn't a finance business, and finance business, it is very common for them to have this type of loans. Next, we're going to talk about profit and loss statement. Again, only 2 years data we have. So income from operations have gone up from 3,597 crores to 5,800 crores. So there's a rise of 61% in revenue from operation, which is a very good development happening, which the growth is quite exceptional. Like actually 61% is a very good growth actually. And employee benefit, obviously it will go up, and finance cost relating to lending activity of subsidiaries, so again finance cost will also go up. And the total expenses is a little bit of weird to worry. It has gone up by 72%, so whereas the revenue of the company has gone up by 61%, but the total expense of the company has gone up by 72%. The company need to increase efficiency in this particular area, and the net profit of the company is up by 31% from the previous year. The decrease in the net profit percentage, if you see, I've mentioned in the left side of the screen, the net profit ratio in the year 2016 was 14.5%, and in the year 2017 it is 11.9%. The reason for this type of decrease in the profits ratio is because of the increase in other expenses, and the company is also suffering loss in health insurance business, because it is a new business, and also in the My Universe app. So this type of business are giving loss to the company because it is new in this particular area. That's why the expenses are high and revenues are less. But in the future, when this particular company starts to gain profit, then again the profit margin ratio of the company will definitely going to improve. Next, we're going to talk about quarter results. So starting with December 2016, June 2017, September 2017, December 2017, and right side of the green part of the screen, that is the 9th month result. Nine months, like starting from first 3 quarters of 2016 and first 3 quarters of 2017. We are going to compare this. So if you see, income from operation has gone up year on year by 156% from December 2016 to December 2017. Growth in revenue from operations is 156%, and quarter on quarter growth is 4%, which is a good number again. Expenses of the company has gone up by 195% year on year from December 2016 to December 2017, and quarter by quarter it has gone up by 19%. Again, this is purely because of this new businesses of the company. And net profit of the company year on year growth is 23%, and from the last quarter there is a fall in the quarter net profit. And if you talk about the 9 months result, December 2016 to December 2017, so income from operation has gone up by 151% year on year, and other expenses has gone up by 196%, and the net profit of the company has gone up by 46%. The growth in net revenue is very good, growth in net profit is very good. The expenses company need to control, which will automatically happen when the company start earning profit from the new businesses. Next we're going to cover the cash flows of the company. The cash flow of the company is not very impressive. If you see, in 2017, cash flow from operations is negative 7,500 crores, which is a very bad number actually. And the company has made investment, and the company has also raised fund. That's why you can see positive number from finance activity. Although the company is having positive cash flow in the year, but it is mostly because of the fresh capital the company has raised. So the income from operations should be improved. Then we can see a very good growth coming in the company. Next, we're going to cover revenue and profit contribution by subsidiaries. Here, if you see, from NBFC business, we are going to cover only the quarter thing. So if you see, in the September quarter to December quarter, there's a growth happening here also. And if you compare from the last December also, there's a good growth happening. From last December is 947 crores to 1300 crores, which is a very good growth in the NBFC business. Life insurance business again is a new business, and so there's nothing much in that particular area. In asset management company, there's a growth happening from 246 from last year to the current year 316 crores. Very good growth in the general insurance business from 29 crores to 72 crores. broking business like Aditya Birla, in that growth is okay, not much, but yeah, it is decent enough, from 32 crores to 42 crores in the revenue. Health insurance business again is a new business, but very good growth happening here also. Last year it was 39 crores, current year it is 76 crores, almost double. And other finance business like which covers this Aditya Birla, My Universe and all, very good growth happening in that particular area as well. But again, it is a loss making business, so in the future it can be a profit making business. So if you talk about point number 2 is about the profit growth, and the profit is also very good. From NBFC you can see from 232 to 298 crores. Life insurance business is 50 crores. Asset management is 114 crores from 67 crores. Generally broking is nothing much happening. Aditya Birla Money is okay, and health insurance business is basically giving a loss here, and other financial services are also giving a loss here. So that thing should change in the future. Next, we are going to see some major highlights about this particular company of this individual subsidiaries. Okay, Aditya Birla Finance Limited. So lending book of the company has gone up by 33% year on year, and earning before tax has gone up by 27%. So the numbers are definitely very impressive, and the company is planning to open 33 new branches are coming up in tier 2, tier 3 cities. Next is Aditya Birla Finance Company. Again, the lending book of the company has gone up by 108 crores, 108% year on year, and earning before tax has gone up by 100%, which is doubled. So very good business is happening in this particular subsidiary, and the company is entering into this affordable housing, and they're trying to tap this tier 2 and 2 tier 4 cities, and targeting 50 more branch by the end of March 2018, which is almost done. And Aditya Birla Sun Life AMC businesses, the asset under management has gone up by 33% year on year, and earning before tax has gone up by 73%, and market share of the company has gone up by, the market share of the company is around 10.79%, and company registered a growth of 84% in the year compared to the industry growth of 63%. So this particular company is performing better than the industry. And Aditya Birla Life Insurance Company, the AUM of the company has gone up by 11.5%, and EBITDA has gone up by 41%. So this particular efficiency in this particular area is very good. And next is Aditya Birla Health Insurance Company. The company has total of 173 crores as a premium they have received in 9 months, and covering 8 lakh people, and the retail contribution is 28% coming in the quarter 3 compared to 16% from in the Q1. And the company is tied up with 5 banks: SDFC, DCB Bank, RBL Bank, Deutsche Bank, and AU Small Finance Bank. And 65% of the business is coming from digital mode, which is again very efficient mode, because you don't have to spend much on this digital mode, and 65% of the business is coming from this particular area. Next, we are going to do PE analysis and future valuation of the company. So at present, the EPS of the company is around 3.3, and PE ratio is 45. Industry average is 42, and the current market price is around 148 rupees. So if you talk about that, if you divide like 148 divided by 3.3, so 45 is the PE ratio. So again, there's a fall in PE ratio because once the company was trading at 250 rupees, now it is trading at only 148 rupees. So it is reached to the close to industry average. So basically what that means is the company may not fall much from this particular level. The fall can be maximum, I think, somewhere close to 120 rupees, maybe if Nifty is falling down only 125 rupees, 20 rupees, the company should not go below that. And the expected PE for the company is 3.79 after the Q4 result, and the total expected profit for the year can be somewhere around 836 crores. If that happens, then expected EPS of the company will be 3.79, and if you multiply 3.79 with 45, which is the current PE, considering the fact that the market is very down right now, and in the future, if the market improves, the company people may be able to pay more number of PE for this particular more number of times they're able to pay, because of the market becomes attractive once again. If you talk about it at the current level also, the share price can go up to 170 rupees, and if the people are ready to pay more money to buy this particular company, because the market becoming improving in the future, then company can go to close to 189 rupees. So what my personal opinion is, this company is a very good investment for a long term, not for a short term. The company has fallen a lot, and it is a very good time to enter in this particular company. And if you're already holding this company, then if you have more money, then you can average your position right now at current level, or you may wait a little bit more to, if you might get at 125 125, that will be a very good price to take average. And you need to hold this particular company to 3 to 4 years in order to see profit or very good returns, or it can go up to like 300 400, maybe based on the business, how the business of this particular business, like how the business in this is going to improve in for this particular company. It is purely based on that. If telling like it is definitely going to come 400 500 level in 3 to 4 years will be a wrong thing to say actually. But if the company I'm very strongly positive about this particular company, because we have seen this company is doing good in all the particular area, and the business of this particular company is improving year after, like quarter after quarter. So definitely growing is going to happen. The reason company fell because the valuation of the company was very high. It was trading at very costly. The PE was very high at that time, and now it is corrected a lot. So I think it is a very attractive price right now to buy. So take your decision and let me know below in the comment what do you think about this particular company. Okay, so if you like my video, please subscribe to my channel so that you do not miss a video like this, and give us a thumbs up. So, and please share this video so that you can share your video, so even your friends can get benefit by watching this video and investing. Okay, so bye.